What does the current state of the global economy tell us about the future of our world? As we navigate the labyrinth of global finance, the International Monetary Fund, or IMF, provides us with a compass, forecasting a brighter horizon for the U.S. economy this year. We're looking at a growth rate of 2.7%, outpacing other advanced economies, thanks to robust productivity and employment growth. But with great power comes great responsibility, and the U.S. must now grapple with concerns of overheating and rising inflation. On a broader canvas, the IMF expects the world economy to expand by 3.2%. China and India are the standout performers, with growth forecasts of 4.6 and 6.8% respectively. But let's not forget, the global economy is a complex puzzle, with each piece influencing the other. High government spending, debt levels, and potential trade restrictions on Chinese exports could add fuel to the inflationary fire. So, with these figures in mind, what does this mean for individuals, businesses, and governments? Let's dive deeper into this economic ocean in the next scene. As we move forward, inflation emerges as a key concern. But what does this really mean for us? Inflation, the rate at which the general level of prices for goods and services is rising, is projected to average 5.9% globally in 2024, according to the International Monetary Fund. Now, this is no small figure. There are several factors contributing to this inflationary pressure. High government spending, for instance, can lead to an oversupply of money in the economy, driving up prices. Similarly, high levels of national debt can inflate prices as governments print more money to pay off their debts. There's also the matter of potential trade restrictions on Chinese exports. If these restrictions are put into place, it could lead to a decrease in the supply of certain goods, pushing their prices up. Now, let's not forget about the European Central Bank. They've been urged to carefully manage monetary easing, which is essentially the process of decreasing interest rates to encourage economic growth. The goal here is to avoid falling below their 2% inflation target. But why is this important? Well, if inflation falls too low, it could lead to a deflationary spiral, which can be detrimental to economic growth. Inflation, therefore, poses significant challenges for economies worldwide. But how is China's economic growth related to this? China's economic growth has been impressive, but what risks does it pose to global inflation? Let's delve into this a bit. China, the world's second largest economy, is expected to grow by 4.6% this year. This robust growth is indeed commendable, but it's not without its challenges. One major concern is the practice of dumping. This is when a country exports a product at a price lower than the price it normally charges in its own home market. It's a strategy often used to gain market share, but it can distort trade and lead to unfair competition. If unchecked, this could potentially exacerbate inflationary pressures globally. Further, potential tariffs on Chinese products could also contribute to rising global inflation. Tariffs, which are essentially taxes on imported goods, increase the cost of those goods. As a result, consumers end up paying more, and this can fuel inflation. So, while China's economic growth is a testament to its resilience and dynamism, it's important to consider the wider implications. The ripple effects of China's economic policies can indeed reach far beyond its borders, impacting inflation trends worldwide. Thus, China's economic trajectory can significantly impact global inflation trends. So, where does all this leave us in the global economic landscape? Well, the International Monetary Fund's forecast presents a picture of an economy in flux. We're seeing the US economy gaining momentum with a promising growth rate of 2.7%, outpacing other advanced economies. Yet, this isn't without its potential pitfalls, as concerns of overheating and rising inflation loom large. Meanwhile, the global economy is expected to expand by 3.2%, with significant contributions from China and India. But the elephant in the room is inflation, anticipated to average 5.9% globally this year. Government spending, debt levels, and potential trade restrictions on Chinese exports may fan these inflationary pressures, necessitating careful monetary management. And let's not forget China's robust economic growth. While beneficial in many ways, it's also a potential inflationary risk, especially if there are concerns about dumping practices or potential tariffs on Chinese products. To sum it up, we're in a period of economic growth peppered with challenges. These developments have implications for everyone: individuals, businesses, and governments. As we navigate the complexities of the global economy, it's crucial to stay informed and prepared for the economic trends that shape our world. Thanks for watching. Please don't forget to like and subscribe to our channel.